To understand index funds, you first need to understand the word index. Index is just a fancy term for the word list. A stock index is literally just a list of companies that all have stock that meets a certain criteria. So this is kind of like the honor roll. In order for a student to be on the honor roll, they need to have a certain GPA for a certain period of time. Now, one of the most famous or popular indexes is the S&P 500. It's a list of stocks from 500 companies that each meet a few different criteria. For example, they need to be publicly traded and listed on a stock exchange for at least 1 year. Their value needs to be higher than $13 billion total based on its market cap. And they need to be located in the United States with a majority of shares owned by the public and not privately held. There's a lot of other criteria, but those are the basics. And a few other indexes that you may have heard of that are pretty popular are the Dow Jones, the NASDAQ Composite Index, and the Russell 2000 Index. Now, an index fund is a special type of investment fund that includes a bunch of different things like stocks or bonds that are copied off of the same specific index list. Think of it like a basket of investments that all come from a specific list. Unlike stocks or ETFs, index funds come with restrictions and rules about how often you can buy or sell them on a stock exchange. So, for example, if you were to buy shares of an S&P 500 index fund inside of your brokerage account, you would automatically own stocks from companies that are all on the S&P 500 list. But you would also need to make sure that you only make one trade per trading day with that index fund. So if you buy shares of an index fund at 11 o'clock in the morning, you would need to wait for that trade to be executed after the markets close, which is at 4 p.m. Eastern time. With index funds, you cannot buy and sell as many times as you want in your account, but you can do that with a stock or an ETF. Index funds are a good investment to buy if you're an investor who's looking to automatically diversify your investment portfolio and spread out your risk. Since index funds are usually managed by a computer program, they come with pretty low fees compared to actively managed mutual funds, which cost more money because they're managed by people. This makes index funds a really good choice for people who want to invest their money over the long term and don't want to pay a lot of money in fees. So, what's the downside of owning index funds inside of your investment portfolio? When you invest in an index fund, you're essentially buying small pieces of all the companies in the index list. And your goal is to get the same exact return as those companies, not beating the index. That means you know right away you will not be getting a better performance or better returns than all of the companies on that list. In other words, you won't beat the market. This is not really that big of a deal for investors who are focused on the long term because data shows that 90% of investors can't beat the market over the long run. So even if you were to choose individual stocks that you wanted to have in your portfolio, the odds that you would beat the returns of that index fund over a long period of time are pretty small. Finally, index funds tend to come with a higher minimum investment required. So sometimes that could be as high as $3,000 or more. And that means that investors might need to save up some money before they could even begin purchasing index funds. And that means a lot of investors choose to shop around for ETFs that are similar in terms of the companies they invest in because those have a much lower starting amount required. Keep in mind that these are just some general pros and cons of index funds, and the specific pros or cons of a specific index fund will depend on the characteristics of that fund, as well as market conditions. And as with any and all investment choices that you make, it's really important for you to do a little bit more research about the particular investment you're considering before putting any money in it. If you want to learn more about index funds, check out the rest of the resources available right here on Snowball Wealth.